up, wonderful people? Welcome back to Royal Blu FX. In today's video, we're going to do a trade recap video on US30, on some of the trades that we've taken this current week. Now, we've taken a lot of trades, obviously, because we scalp most of the time. Hopefully, you're not overwhelmed by all the trades that we go through, but obviously, we're going to be sharing so much valuable information on all these trades because, you know, we trade smart money concepts. So obviously, if you love the smart money concept, theory of way of trading, then this will be so much value for you. So without wasting any time, guys, let's just get into the video. All right, so a lot of you guys have requested a video recap on all the trades that we're taking. Obviously, if you're following us on Instagram, I post a lot of the trades live that we take, and so obviously I'm going to break down to the trades that we've been taking because a lot of you guys are interested. Now, since we do scalp, right, you can see all this whole garble of mess here that's happening here, right? We started from Monday over here, and obviously we're trading all the way until Friday, which was yesterday. Friday was here, Thursday was here yesterday, so today is Friday, so we'll be scalping here as well later on today when the US30, when the New York market opens, okay? So let's just talk about, what I want to do is talk about the trades that we taken yesterday, and then we'll make another video on the trades that we made on Wednesday. So this is just yesterday of Thursday, which I believe was, let me check the date here, it was the 29th, Friday the 29th. So if you guys want to follow the trades that we were taking, you guys are more welcome to do so to see where exactly we've been able to take these trades, okay? So without further ado, let's just begin. I normally start on the 15-minute again, right, to scalp. I go all the way down to the 1 minute for the behavior, to see the behavior of the markets, and then I look at the 5 seconds for the entry. So I'm just going to cut the market here, and then I'm going to start talking about this right now. So here we go. Obviously on the 15-minute, what I normally do is I map out sort of where all the liquidity is in the market. The main liquidity that I can see, like here and here, right? You can see that there's double tops, right, and more double bottoms here, whatever. You can see there's more liquidity from here to here, right? There were a lot of buyers here. There were more buyers here. The buyers failed to take out these, the buyers here failed to take out this high, right? So price reversed. And then once I mark out all this liquidity, I start to then look at sort of the structure, right, on the higher time frame, right? Now, I'm not so much concerned about structure as I am with liquidity here, because this approach is really looking at on the liquidity side more than it is on the structure-based side. But we have to keep in account that structure is king above all. So we are putting structure as sort of secondary, if you will, instead of putting it as the first, right? Even though I say structure is king. But listen to me and hear me out on this when I'm breaking this down for you guys, so you guys can clearly understand what I'm talking about. So let's go down here. All right. So once we see all this liquidity, you can see I've marked out the liquidity here. Right. You can see this high here went out over here and took out this high, pushed prices down. I marked every little thing that I could see. Right. So then I go down to 1 minute like this, and then I start to ask myself, okay, what's happening, right? Here we were actually at the very high over here. Right over here you can see there's a trade that we took, and I'll explain this in just a second. But I usually like to trade. I like to trade the US Open or the New York Open all the time, because I know when the New York Open happens, most of the time there's some sort of liquidity being taken before prices go bearish or bullish. In this case, you might be wondering, why did you take a sell here, right? So right over here is where the US Open happened, right over there, and the US Open here happens at 4:30 p.m. I know it says 6:30 there because I'm on Los Angeles time. It's easier for me to keep track of it in terms of when the US opens. So let's go over here. You can see here, the only reason why we were looking for a sell here is because you can see this low here broke above this high here, which swept all the liquidity. It mitigated right over here, this order block that you can see right there. Let me just zoom in here. I didn't even mark out the supply zone, but I'll do this for you guys right over here. Okay, you can see right there from that low right there that I'm seeing. Okay, that was our supply zone. Let me just make this a little more clear. Okay, once we got tapped, I immediately, excuse me, I understood that we needed to have some sort of aggression coming from this high, right? So the high here came and gave us huge aggression, and what did it do over here? It broke this low. So that was our secondary sort of, oops, excuse me, that was our second idea of knowing that prices should go bearish here because we have a chalk. So we had an aggression. It gave us that chalk right here that we see. And what do we know about chalks? Well, we know that the chalks reverse prices and they continue in the intended direction. The intended direction is bearish right now. So once we were here, prices were retracing, and I start looking at the markets roughly around 10 to 15 minutes before the market opens, so I can be well prepared, right? Hence why I marked everything before the market was opening. We saw prices were going bullish here. The 1 minute is our behavior time frame, so we're looking at the behavior. We can see that price is retracing back to this area of supply here. We see this is the unmitigated order block right over here, right? You can see prices tap that order block, and then now what I'm looking for is the same scenario as I was looking on the higher time frame, on the higher time frame structure, right? So here, if I zoom in here, you can see there's a lot of liquidity being formed here, right? Internal liquidity. There's more liquidity there, right? There's more liquidity here. You can see actually there's a bunch of sellers that sold here. More sellers tried to do the same but failed, and price broke to the upside. Now, if we put our trend line like this, you can see that there's sellers trying to sell like this, right? Hence as to why this is liquidity, right? So prices came over there, liquidated, mitigated, right? We're looking for liquidation, mitigation, then aggression, and then we're looking for the chalk, boss, and then entry. Now over here you can see that we had this aggression move here. We saw that this is a low here on the lower time frame. If we go down to the 5 seconds here, you'll see what I'm talking about. Right here is where we saw our chalk, specifically from this low right there. Okay, so I don't have that marked out because I knew this on hindsight that this is my chalk, obviously. And obviously when you're in the 5 seconds, everything just goes super fast. So here was our break of structure. I saw more liquidity right here, which I didn't mark out as a liquidity, but I put a line there just to, obviously let me know that that was liquidity. And then once liquidity was taken, I told myself, all right, again, we need another aggression. We had liquidation, right? Well, then we had a liquidation, mitigation, which is right up here. Then we had aggression, and then we waited for price to retrace back to the order block, and then we sold it. Now my risk here was at zero, almost a pip actually, to be honest, from there. And then we were able to we were able to extend this all the way down here. Now the reason why I targeted this low here was because this is the major low. There's the major high, so I took the liberty to really target this low first, because at first I was looking to target this high actually, like this. Okay, and this is the down candle before the major move pushed up. So sometimes the market just comes and taps the order block and then pushes bullish like this, right? So as you can see, we were still bullish on the higher time frame here. You see there's a low, there's a high, there's a low, there's a high, right? So if prices respected this, prices could still shoot up here and potentially break above my high there. So this is why I took the liberty to target this low here. We had a, a 17.2%. Now, again, it's really important to understand when you enter, you always need confirmation due to the fact that the market can do whatever it wants to do. We had our chalk, as you can see, we had that break, right? This is our type 2 break of structure on our entries. Once that type 2 has given us that visibility, that opportunity, we look to strike here, and then the rest was history. Now, of course, I took the liberty to take out the whole trade here and exit there, but of course I could have held it, and I don't know why I didn't hold it, because there was more liquidity here. Normally when I trade just liquidity, I look for prices to take liquidity, right, and I trade away from liquidity. Then I look to target liquidity. Okay, so what I always see happens in the market is that prices go from liquidity to liquidity all the time. and that's what I would do. So I don't know why I didn't target this low here, but prices here evidently came here, and we would have made a nice more R&R, like serious R&R, even though we have already made 17.2. So let's go here to the next trade. So what am I doing here? Well, fortunately for me, whenever I price break structure, I'm not looking to get into everything. Obviously, what I'm trying to do is just look at where liquidity lies in the market. And as you see here, we have a buy pressure happening here, more buying pressure happening here. We also have more liquidity here from this low to this low here. So there's just a bunch of liquidity, right? So normally what happens when liquidity is being taken, right, prices just grab the liquidity and shoot back the opposite way, only because we know liquidity is the fuel of the markets, right? So let's go down to 5 seconds here. As you can see here, I was trying to mark out what was happening here. I didn't take any trades, obviously, but I'm marking out sort of what the market is giving me here already. I can see that I have a chalk here, right? This was a potential buy here, but I didn't buy it only because I didn't have the aggression that I was looking for. Excuse me, there was an aggression here that I was looking for, and here was my entry, right? But what's interesting about this is prices has just been bearish this whole time, and you can see there I saw that there's more liquidity here as well. Prices came and took that high here, mitigated, and pushed prices low. So that's why this was a no-go for me, because I could already see liquidity was lying here. Therefore, it was kind of dangerous for me to look for buys here, right? So prices were doing this, right? We had another break to the downside. I'm looking for this high to go now, and then So then I'm thinking, okay, well, if prices break here, I'm good to go, right? Well, yes and no. If I play this and you see what happens, we had a break of structure. I already had my liquidity marked out, and I thought to myself, okay, well, we're still bearish. There's no point for me to look for buys here now. Even though I have my chalk, there's no point for me to look for buys here, because the price right here is the markets are taking the liquidity here. So it's pointless for me to look for buys here because we're still bearish, right? Normally, when I mentioned to you guys, when price takes out liquidity, it actually goes towards the intended direction. So I didn't want to take liquidity. I didn't want to take this buy based off the liquidity grab here that price is taking. Now, what's weird is price went just a little bit higher, and I was like, okay, this is really interesting. I'm not convinced that this is still my buy yet, right? If this was my buy, I really need more confirmation. I need another break of structure. So I was hoping for this low to go, to take out this high. It didn't do that, and it kept creating more liquidity. I was like, all right, so I marked out more liquidity here for prices to take. If prices were to go up, I might look for more potential buys to take really bullish from here, because this is my demand zone, and this is something I could be interested in taking buys here. 2 or more breaks of structures will tell me that price is indeed going bullish, and that has not happened, as you can see. So what do I do here? So I'm already, in hindsight, I'm already thinking to myself, okay, I know prices are bearish. This high here was able to take out this liquidity. I tell myself there's liquidation, there's mitigation, there's aggression, chalk boss. I could have entered here, but I didn't. So what I did was I followed order flow going bearish. I can see that there's 2 breaks of structures right there. Once we had 2 breaks, price, you can see here, left inducement, liquidated it, came back bearish, and it continued bearish here. So what did I do again? I saw there's more liquidity there. There was liquidation right there, right? Mitigation. I saw the aggression. So without a doubt, I knew this was my entry. This convinced me enough to take this sell, and then I was targeting this low right over here. But bear here with me. I want to show you something. So once we were targeting this low, we hit our TP, but then I stayed in just for a little bit, just to collect a little more. I know it's a little greedy to do, but I wanted a good R&R for me. This was a 7.1%. I think I could have gotten, let me see, 5.3%. Although 5% is 5% is minimum from what I usually like to take. So yeah, there you go. So we hit this TP, and this was a very good trade that we took. Let's continue here. All right. So here we are. So we're still at this demand zone here, this great demand zone. It sort of broke below the demand, but I'm still thinking to myself, okay, well, we could be still buys here because I know we just had this huge liquidity sweep from the downside right here. There's so much liquidity right here, right? And never be afraid to trade against the trend, only if you know how to trade it, obviously. We are trading against the trend based off of this major push. You know, this isn't a high probable trade to tell you honestly, but for us it was a good enough trade nonetheless, because here what was interesting is, again, we were noticing that this was liquidity here, but if you zoom out also here, I believe on the this right over here, all this liquidity right here was still accounted for. So we were really trying to take advantage of this liquidity move based off of this trade right down here, which we're going to go back to right now, right over here. Okay, so here, this is what told me to buy, to look for buys. Now I didn't enter this on the 5 seconds. Okay, there's more liquidity here. So there we followed our model, right? Liquidation. Then it mitigated something all the way to the far left, which we couldn't see, but I know it's mitigating it when price takes out liquidity. So our natural, our natural idea is to think, wait for breaks of structures. We had a BOS right there, right? Our chalk boss. We had the aggression, and then price came back to our order block, and then we entered. Now we entered this on the 1 second. Now this is really insane. I wanted to look for the exact order block, although sometimes you can't find the exact order block. You just kind of have to make up, sort of a demand zone somewhere sometimes. This made perfect sense because we saw more liquidity here. I know I didn't mark this out, but we saw more liquidity there. So it made sense for price to come and take out liquidity again. Our sort of model, our theory and our model for trading again starts again, where we see liquidation like this, mitigation, aggression, chalk boss, and then you buy. So I could have bought here again, but instead we just stayed in it, right? We targeted this high for the purposes of liquidation. There was more liquidity here where we marked out. Okay, we marked this out, so we knew that there was some sort of intention that price could just stop here, take liquidity, and go bearish here. So I quickly, as soon as we hit price, our TP here, right, I tried to get out as fast as I could, obviously, but it kept going up, and I was like, great, we'll just take more of this, take advantage of this, right? We had 24% right here, 24, as you can see. That's 24% in the markets on the 1 second, all right? So this was a good trade for us, nonetheless. We look to go in for this next sell-off over here. Now, you're probably thinking, why are you looking for sells then? Right? Well, we understand what is happening clearly on the liquidity side, right? Structurally, it all makes sense because everything is bearish, right? If you see over here, all we're doing is following liquidity. Price liquidated it, mitigated it. Now we're looking for the aggression, and now we're looking for prices to go sell off from here. Now, here's what happened. We took a sell here, right? And then we TP'd right over here for the first part. Now I didn't get out. I got out. I took out partials here because this was my demand area, and I didn't know if prices should continue bearish here. I'm telling you this, guys, honestly. Sometimes you're just clueless as to knowing where exactly you need to be targeting, and especially when you're going at this rate, at this very fast rate of trading, right? So I took partials here and let the rest run, and I believe this took me out. Yes, it did take me out at break even. So it took me out at break even. I was like, cool, no sweat, we're good to go for the next move, right? We're just looking at the markets. Now, again, I could have looked for another entry here. Look at this. We had more liquidity right over here, set here. You can see it clearly. So what is this doing? Liquidation, liquidation, mitigation, aggression. What we need here is confirmation, right? That confirmation is that chalk boss, right? We need price to pull back, and we can look for the entry here. Now, my dumb self wasn't entering for some odd reason. I don't know why. I don't know what I'm thinking sometimes. Sometimes it gets you, when you're in lower time frames and everything is going so fast, you need sort of to slow down. You need to pull the reins back and really hold it and just wait for prices to actually give you something that's more easy to read. In this case, for me, it's liquidity. I can easily read liquidity, and I can take advantage of the liquidity. And sometimes you just need to take a break from all these trades that you've taken, so that way you can just take a breath, right? All right, let's continue here. You can see me marking out all the liquidity. You can see the liquidity marked out here, right? Prices point bullish, more liquidity here. I'm really just now taking, I'm trying to take the best trade here possible, because I don't want to just be entering in on markets that I don't need to be right now, right? So here, I took the liberty to mark out another demand zone from the higher time frame. If I zoom out, you can still see we're still liquidating this liquidity here. So my intention is to look for buys. Okay, I believe right here, you can see we were waiting for this chalk, right? And again, the rules meet my rules meet again. We have the liquidation, mitigation, aggression, and then we have the chalk boss and entry right here. So this is very helpful because you know, if you follow the system, it definitely helps you out in terms of entries. You know, in terms of sort of following these consistent rules. You can see price went bullish here, so we stayed here. And the reason why I was looking to enter here is because, again, from all the factors that meet my rules, I was targeting this high because there's a lot of liquidity here, right? What we try and do is we trade away from liquidity, not towards liquidity. I know that sounds a little oxymoronic when I say this, but normally when we look to trade, we don't trade towards liquidity without having liquidity being taken out first. So here you can see prices went bullish, right? Taking out liquidity here because prices go normally towards liquidity, right? And sometimes we can't predict that, and we're not supposed to be predicting what the markets are doing. We're supposed to be able to, analyzing the charts correctly and making sure that prices are correct in our sort of rules that we place, if that makes sense. So here you can see prices haven't really tapped my supply zone, although actually, excuse me, I don't know why my supply zone was this, but I had it marked out this way. I did TP and I took out my money from here. So this was a good trade. I believe it was 7. Well, it wasn't there actually. It was 6.7%. Yeah. So I usually target the open, or excuse me, the open of the zone. Yeah, the open zone over here, and not inside of it, just for safety precautions. Here we now we're just waiting for prices to do something else now. Okay, we're looking for prices to continue in another type of direction. I could have taken a sell here if I wanted to, but I didn't. There's liquidation, mitigation again, chalk boss, right, entry, done. This is, if you follow this business model, guys, you will definitely not go wrong. I think I just called it a business model. Our model theory. All right, let's continue here. You can see prices were going bearish for some time. Now it's going bullish. Right now I'm back actually on the higher time frame, I believe, from here. Let me get rid of this. Let's play this quickly. This will take forever. Let's go back on the 30 seconds. All right, right here. All right, so we are bullish. Notice I'm not taking any other trades. I'm really trying to look for, like, quality trades now. And the reason why for this is because, sometimes entering in too many trades, you're exposing yourself to too much risk, which you don't want to be in, obviously. I'm being patient now, reading the charts more on the higher time frame now, sort of because I want to take advantage of, the best trades possible. I can see what happened here. You can see I marked out more liquidity there, more liquidity here. Prices mitigated something. I think, I was looking for a sell from this high, actually. Let's go down here. I was looking for a sell here, but I didn't get my setup that I was looking for. You can see here we had a chalk, right? I didn't get the break and mitigation here, and it sold off right away, so therefore I wasn't able to enter here, although I could have entered a little bit early. I could see that we did have right here, there's liquidation, right? Liquidation. And then there was mitigation, there was aggression, and here's your entry. So I could have entered from here, right? And this is sort of our early entry method, which I wasn't utilizing for this sort of entry. It really comes down to you in terms of what you think or what looks good for you. Obviously, following your rules is so important here. You can see here again, I was marking all my liquidity. We're bearish here. This is a demand zone here that prices may reverse based off of this push here this demand. Now I see a bunch of liquidity on the downside here, right? All this is liquidity here. Everything that you see here is liquidity. Same from the upside over here. I was just looking for my same rules again. I marked out my chalk. As you can see here, we had a break of structure, a chalk. We had liquidation, mitigation, and now we had waited for the aggression here. Okay, now you can see here where I didn't even enter the market, right? Because what's interesting is normally when price comes down to your order block, it will tap and then go, right? We can obviously see that we had liquidity right to the downside right here, right there, but price came in so aggressive that I didn't even enter. So I was like, okay, cool, let's do it again, right? What I'm looking for is for that chalk scenario again. You can see that now we have a clean chalk, right? This was the cleanest chalk we've ever had. So I'm thinking to myself, all right, cool. I'm looking to set where my order block is next. You can see that I'm evidently putting liquidity here. I've noticed there's liquidity, so I'm not entering right away. I'm literally needing to see liquidity before I enter. Okay, so there we go. So now what's happening here is once I saw liquidity, I was all good to go from here. You can tell, this is the funny part. I know a lot of people will probably give me some hate on this or whatever, but here, prices did take me out. Now, normally, when I enter, I do manual trades. I don't immediately put my stop losses right below, just for some, purposes of knowing that, liquidity, the markets come and take me out right here, right? So I don't do tight stop losses. I give it a little room to breathe. Although normally I usually put my stop losses just in a little bit right below where that liquidity, where the markets can take you out based off where your stop loss is, right? So thankfully for me, it all worked out fine. Prices were going bullish here, so this is how you're doing it, right? So we had this beautiful chalk, right? We had liquidation here, most of all. You can see even the markets came all the way down here to this area. We had all this liquidation, right? And you had this low still respected. We had this chalk, and this is what told us that we would be looking for buys here. Now, I was only targeting this supply zone down here. This was the last buy before the sell. And then, because it's safer to do that only because you never know when price is just going to tap it and go, right? So we were really sticking into this. You can see here it says took partials of 6%, took my 6% partials, and I let the rest run. Because once I pay myself, I don't need to worry about what the market's going to do, right? I can wait for it to liquidate and take more of the, take more of the, to make me more money over here. So once we hit this supply zone right here, right, I was like, all right, let's see what's happening, right? Again, I took 6% partials. I don't need to worry about anything here. I can just stay in it because, I want to liquidate and liquefy this whole market, at least until this high here. If prices should ever hit the supply zone and go bearish all the way down here, you can see there's more liquidity. I might be able to get out. I might get out even at a break even, or just take some of the money and get out, or all the money and get out. But thankfully, it all worked out, right? A lot of part of this trading is really just managing your trade. Once you enter, you don't want to be greedy, right? You want to let some of that money sort of, float, if you will, in your markets, in your trade, only because you don't know what the market may do. And the whole part of trading is, the whole idea is you should know how to trade. You should know what the market should do, right? We can all speculate what the markets may do, but nobody knows what the markets will ever do, right? We only have a theory and rules that we need to follow. My rules is whenever I enter, always take out partials, because you always need to pay yourself for that hard work that we're making for this trade. And once that goes in, right, you're taking partials. You don't need to be greedy. You need to let that thing run now for whatever reason, wherever the market should go from here on out, right? And then luckily, I would say 70-80% of the time, if you are following this sort of model theory that we trade, the way we trade, you will go no wrong. I would say it's about 80 to 90% strike rate, win rate on our trades, right? So obviously you can see we hit TP. Well, we didn't really hit TP to the upside, honestly, but I exited when price was at this high, literally when price targeted, when it just hit this supply zone, and I just got out. So I would say I made roughly about a 9.3%. I didn't make a 11% that I was looking for, and which is totally fine, right? I don't need to be greedy, right? And then prices just, look at that. Prices continue bullish here. So, guys, I hope you learned a whole lot about this, all the trades that we've taken, guys. I'm hoping I dropped a lot of value. Please do, hit that thumbs up on this video. Obviously, subscribe, because this is always valuable information that we always give out, right? We always give out free content for you guys to take advantage of your trades and learn from us as much as possible. Guys, have a great day, and we will see you until the next.